Welcome to the lesson on ascending and descending channels. These patterns are also known as the bullish flag channel and the bearish flag channel. Now, the ascending channel, or the bullish flag channel, has two parallel lines that connect the wick of the candlesticks to identify a trend. When you identify an ascending channel pattern in the market, you'll then identify the trend really clearly. Ascending and descending patterns are channels which are formed using the trend lines. And here's an example on the chart. I'm using the trend line drawing tool to identify the trend of the market using an ascending channel. The current trend on the market is bullish and it's on an uptrend, but it can be broken. So it could start to go down and change the trend. An ascending channel is an excellent analysis to look for entry or exit in the market. The support zone at 1.33047, drawn with a horizontal white line, indicates the connection of the previous wicks of the candles with other wicks. Now, I've connected the trend line only 2 times, and that's a valid trend line. The other trend line is connected more than 3 times with other wicks of the candles. 2 parallel lines and an uptrend can help us identify potential reversal or continuation zones in the market. The trend currently is still bullish, but you can see the highest wick above the yellow resistance zone, which indicates the price has started to fall due to resistance. And the white horizontal line indicates the support zone. That's the power of 2 parallel lines instead of 1. With an ascending channel, besides the uptrend, you can also identify potential reversal or continuation zones using the support and resistance at these parallel lines. The best option in this situation for you to trade in an ascending channel is to open a buy order at the close of the bullish candle above the white support zone. Stop loss should be placed below the support zone, and you could use the upper trend line to place your take profit level. The break of the trend line would indicate a potential downtrend in the market, so you could open a sell order there. Even if the uptrend ends and the ascending channel turns into a descending channel, the market could still go up by retesting the previous resistance or support. So you have to carefully analyze the market before trading. Now let's move on to the descending channel. A descending channel also uses 2 parallel lines called trend lines. And beside the trend lines, support and resistance can occur when you draw trend lines on a descending channel. So let's see an example of a descending channel, also known as the bearish flag channel. The chart shows an ascending channel of the euro against the New Zealand dollar currency pair in a 1-hour time frame. The price has shifted from a downtrend to an uptrend, and the break of the upper trend line has been decisive for that price. Before the break of the trend line, though, the market has given us enough movement to make our entry. I'll show 2 zones where a sell order would have been the right decision. First, the resistance zone at 1.78819. This zone was rejected 2 times and couldn't break, and the price moved bearish. The sell entry should be at the close of the bearish candle below the resistance zone. The stop loss then should be set above the resistance zone, and the take profit target should be around 1.71066 price. Now, this sell order would have given you over 75 pips as a profit. Another entry to sell this descending channel is the price around 1.70835. Now, that's highlighted with the text sell order. The entry would be good too because the price started to fall as the trend line didn't break, and that was a signal of the continuation of the downtrend. Stop loss here should be placed above the trend line, which is connected with the wick of the candle, and the take profit should be the next support zone near the 1.69810 level. As you can see, the downtrend ended once the ascending channel trend line was valid, and a strong uptrend began, which continued for a good amount of pips. Opening a buy order after the breakout would have been a very profitable trade. I'll get back to this chart example in another lesson, which will explain the breakout of the trend line I'm using. For now, let's continue with the next market patterns.